The reality of our situation is that our government is pumped in so much money over the last 15 years that we are at a point where hopefully, thankfully, they're not maybe going to keep pumping it in. We'll see. But if they don't, we're in that spiral. We're in a situation where we better buckle up, Buttercup, is what I tell my kids. Welcome back, Tribe, for an episode that is going to be a little bit unique in the fact that Joey and I are going to talk a little bit more about what's going on in the market today. A lot of times we talk about a very specific subject, or on an episode like this, we just talk about our own personal passive income report and the investments we're making, how they're performing, giving you real live data so that you can make informed decisions on your own. While we're going to do some of that, we're also going to touch into the questions that we've been receiving from our community of, is the market crashing? And as the market, well, it's kind of hard. Is that the economy? Is that the real estate market? Is that the stock market? Is it all of the above? And no matter where you stand on this, I want to help give you some insights from Joey and I's experience of being in the financial world. So Stallion, initial thoughts as we jump into this. Why do you think we're in the situation we are today? And is it getting better? Is it like a blip? Or do you think it's something extended that we're going to go through?
And, Russ, I think, there's a lot of opinion on this, but I'd say there's also a little bit of just data that backs this up. We've been living in a world that is fake money. I mean, if we're honest, the economy has been propped up over and over, no matter who your political affiliation is with. It's not necessarily about one side or the other. It's literally about the economic trends that we have adopted as a country. And it is create more money supply, right? Pump more money supply into the economy. And we don't have to deal with the issues or the symptoms that are causing the problems, right? It's just like a badly run family budget can only survive for so long before you have to deal with the issues that are causing the problem. And I think that's where we're at right now.
If you've listened to our show for any length of time, you've heard us talk about infinite banking and how we were able to use that concept to create over $50,000 a month in passive income. But it's just not that easy to figure out, how does this all connect into my own personal system?
Stallion, that's why we created the passive income operating system, bro. It shows you how to turn active income into passive income. It makes all the steps come together. If you would like to get access to it as a podcast listener, we've never given this away in public before. Go to what'swhatwallstreet.com/PIOS.
We definitely have been in the boom of the boom and bust cycle. And for those who haven't really taken time to look back, if you go back from 1908 to 2008, we experience a bust, a recession, roughly every 4.5 years. And the last one we experienced was 2008, 2009. So if you're keeping track at home, what is that, 16, 17 years ago?
Yes.
We've been in the longest bull run in our country's history, okay? Prior to that, the longest boom cycle we had between recessions was 1991 to 2001. So people, like we have this sense of relevancy, right? And we're like, oh, it's always good. Well, it's because it's been good for so long. But if you've been listening to people out there, they've been saying, hey, we're due for a crash. We're due for a crash. We're due for a crash. And I've been hearing that for roughly the last 10 to 15 years because that has been the track record of our country. And what you just said, Stallion, that a lot of people don't necessarily understand. So I'm going to give it like an analogy I would give to my son, Ryan. If I was explaining all this fake money that's gone into the market, right? Like we've seen the Federal Reserve's balance sheets grow 52% just over the last 5 years. If we're looking at the math and we're saying, okay, what does that mean? I say, well, Ryan, that 52%, let's just pretend that our country was producing ice cream, right? Every kid likes ice cream. I like ice cream. You like ice cream.
Absolutely.
We all like ice cream, right? And let's just pretend that every month our country has been producing 100 gallons of ice cream. Well, now they increase production 52%. What is that? It's 152 gallons. Well, yeah, everybody's super excited, right? Like, we got more ice cream to eat. Everybody's getting more spoons. Everybody's pulling out their dollars to have it. But what happens? is that now the ice cream is overflowing our freezers, right? We don't have, room in there for the things that we need. What else is happening is that unfortunately we can't use all of the ice cream. So a lot of it ends up melting away. We see that happening in our markets. But now that our kind of federal government is starting to pull back, they're starting to realize that we can't keep pumping more ice cream into the system. They're pulling back, and there's implications of that, right? We're starting to see people starting to struggle, right? Businesses got created to try to support the ice cream business. And this could be every single business, right? When fake money ran into the system, all these other businesses got spurred up because they're like, oh, people are demanding more of my products. I need to go and create things for it. And then that had a ripple effect to the people who supported them, who helped them build. All that stuff has happened. But yet when the fake money runs out, it's like a little kid who's been hopped up on sugar, right? You start to see them starting to spin out of control. And you're like, I gotta get them off the sugar. And they crash. Like my wife was telling me the other day, one of my kids was crashing. And she was like, this is not good. You should have heard the nonsense coming out of his mouth right before he crashed. Well, we're in a nonsense environment, Joey, in our economy. And I think that the reality of our situation is that our government is pumped in so much money over the last, 15 years that we are at a point where hopefully, thankfully, they're not maybe going to keep pumping it in. We'll see. But if they don't, we're in that spiral. We're in a situation where we better buckle up, Buttercup, is what I tell my kids.
For sure. And I want to just add a couple of just kind of current market trends that you may or may not be aware of that have to do a lot with what Russ has just mentioned. Number one, inflation is not dropping. Most recent kind of reports that are hitting the books, they're continuing to kind of creep up. And that's not a good sign for the economy. Secondly, credit card debt is actually at an all-time historic high, like $1.13 trillion in credit card debt. But that's only part of the story, because the other part is that the actual interest rate on that debt is at the highest of all time at 21.5% is the average credit card rate that people are paying.
Crazy.
Now, you add those two things together, inflation and credit card usage and rates are at that high. This is not a formula for success. Now, the third thing, I'm going to just the job market. Super vulnerable right now. And there's actually some things that would tell us why. There's actually a lot of consumer confidence issues in terms of like the way that tariffs are being handled. There's in fact, just on the street. Well, first of all, the data is that the actual unemployment rate is up to 4.1% in February, which is up since December at 3.9%. So you're seeing the trend going the wrong way in terms of unemployment. But then the other part, because of the consumer confidence, I want to hit on this tariff issue. Just the other day, I have a friend of mine who's in a business where he's buying and selling products internationally. Can you imagine the first thing out of his mouth is, I don't know if these are right or wrong, but the vulnerability I feel right now in the actual job market is I don't even know how this is going to affect me. Like, it's still so unknown, but it seems like a sweeping new kind of process that it's like, wow, I don't know what's going to happen. So there's more things that we can kind of point to, but does that kind of lays out the picture of what we're facing right now and why we think that there's a lot of signs pointing to recession.
Well, here's the thing is that, Trump came into office, and I think a lot of people that listen to this show were super excited about that. And they were saying, man, there's a lot of optimism, and now we're going to start getting money back on the markets. And you saw the kind of markets moving in a positive direction as a result of that. But now the markets are down, right? Like they're down, like the S&P's down 10% over the last 30 days. And that is a significant drop, right? Like 10% of your money, poof, gone. And when so many people are looking at that, and that's creating confidence or that's creating concern, one of the two. And clearly right now that's creating concern. And people are saying, okay, well, wait a second. I had all this optimism, but what's going on? What you're saying is that all these little factors are adding up. And I'm not certain people are ready for a recession. I'm not certain that people have buckled up and prepared for what we're going to see. And I'm going to talk a little bit about tariffs, right? Like, I mean, our mentor Nelson Nash was an Austrian, and the Austrians would say tariffs are a terrible thing. That's another meddling of the federal government in our free liberties, and they should not involve themselves. They will mess up the markets. One hand there. The other hand is I have people in my camp that will say, yes, Russ, but if we've become such a consumer society where the majority of everything that's being bought today in America is being brought in from, say, China, and we're kind of in a war with China, whether it's a physical war or if it's just a financial war, if they decide to shut us off, we have a national security issue here. Like,
That's right.
we're in a bad place. So there's a little bit of a balancing act of how do we deal with that, right? Like, how do we process that in our brain? Because I have always been of the opinion, if I can buy a yo-yo, right? If I could buy a yo-yo from someone else at a cheaper amount somewhere else, then that means I have a dollar that can be used to do something else and create more good. But in this example, if everything that I bought, including yo-yos, was coming from across borders, now I don't necessarily control my actions. I am dependent upon someone else. And as entrepreneurs, I can attest, I don't like being dependent upon other people. And I don't know about you as you're listening to this, if you like being out of control, and that's, I realize that's a stupid question because nobody likes being out of control. You're probably driving right now and just, don't do this. But imagine a stranger automatically at the red light got in your car, pushed you out of the driver's seat and started driving your car. How would you feel about that?
No,
Not good.
No.
You would be a little bit nervous. And I think that's the way we have been as a country with lots of things. And I think right now, financially, we need to address the fact that there are lots of issues, whether we like them or not, whether we agree with what's happening in the political spectrum or not, whether it's going to continue, I don't know. But how can you and I, Joey, impact this? What is it that you and I could do that can make sure that our household is secure? And how can we win in spite of a potential recession?
Well, I think the first things first, you have to address the issue in the room. If you are solely economically dependent on your W-2 or the stock market, and we call this wealth without Wall Street for a reason, but if either one of those things you're reliant on, you have to be feeling trapped right now. And if you're trapped, the first thing you got to do is you got to start redirecting what you've been doing. Okay. You cannot continue to do the same thing and expect a different result. All right. That is insanity. We've already heard that quoted a million times. And the first thing is it has to go into a point of liquidity. When I'm putting money into the stock market, into 401ks, into IRAs, into all the alphabet soup that you've been thrown in the past, that's to your benefit, quote unquote. If you're hearing this on the podcast and not seeing it on YouTube, I've got the air quotes going. It is not to your benefit to continue to put money out of your control. And so that's the immediate first step, is to redirect that cash flow away from your control into your control. And of course, you've heard us on the show before. We talk about what Russ and I did 15 plus years ago in the idea of infinite banking. That means putting money into these specially designed life insurance contracts that give you access to your capital in a never ending compounding instrument that will be for generations. Okay.
Well, Joey, for the person who doesn't know what you just said and would sit there and say, well, if, I'm watching my business struggle, whether it's the one they own or the one they work in, they've gone through time frames where they watched, like during 2008, 2009, hundreds and hundreds of the banks, some of the ones that they were doing business with went out of business, gone. And they're like, is that possibly going to happen to these insurance companies? What would you say to them? What are the protection measures in place that prevent the monies they're putting in these life insurance companies that you're talking about that we use for infinite banking? How does that make them feel warm and fuzzy? How do they know that that's not going to be just another one of these things that's going to crash and burn?
Great point. And you should always do your due diligence on this sort of thing. Number one, the companies that we're recommending that people do business with, that we do business with ourselves, have been in business for over 100 years, never having missed the dividend payment to their policyholders. Now, why is that significant? Because number one, it's stability, economic stability through all of the major crashes that you've ever heard historically. And number two, a dividend is a sign of a surplus. That means that they're not working out of a negative access. They're working out of a surplus in order to provide a dividend each and every year. Now, the even bigger picture is insurance companies do business in a much different way than a bank. They're required to have significant excess reserves compared to, you've heard it talked about before, but just in case you're new to the concept, banks can work at a 1 to 10 ratio of how much money they have on deposit being the 1 and the 10 being how much they can lend. So they can literally lend money that they don't have in their own reserve. How in the world, this should not be surprising why banks fail on a regular basis. But insurance companies work on a much higher, like their reserve ratios. I don't know if you can quote one, Russ, but it's significantly higher than the amount that they have on deposit for premiums.
There was nothing worse than walking into class when you're in school and the teacher saying, "Pop quiz day." Why? Because you were unprepared. Are you unprepared, though, for financial freedom?
Don't be. Find out how close you are by taking our 30-second quiz at wealthwithoutwallstreet.com/quiz.
Hey, as a fan of our podcast, chances are you're always looking for other great resources to grow your wealth and build financial freedom.
And if you've ever been curious about self-storage investing, there's only one guy you need to listen to, our good friend, Scott Myers.
Yeah, Scott is the OG of self-storage. He's been in the game for years, and his podcast, Self-Storage Investing, is packed with insights, strategies, and real-world success stories.
Whether you're just getting started or you're looking to scale, Scott's podcast will help you understand why self-storage is one of the most recession-resistant cash-flowing assets out there.
Yeah, go check out Self-Storage Investing with Scott Myers. Wherever you listen to podcasts, trust us, you'll be hooked.
We just got back from spending with one of the top insurance companies in the nation, and they were just complimenting on the amount of reserves that they have in excess of their liabilities. I mean, it's crazy how these insurance companies have built themselves to be the most protected, to reduce the most risk. But why does this make sense for us? Like, how do you get yourself in a position? Why is now a time to consider repositioning assets? Well, if you're, like Joey said, you're not getting what you want, right? What are we trying to accomplish? Joey, your shirt says what on it?
Passive income.
Now, to be financially free, what does someone need to have?
You got to have more passive income than you have monthly expenses.
And what is the
formula?
And what's the biggest obstacle, the largest obstacle to becoming financially free?
Always access to cash.
Yeah, their lack of access to cash is what's preventing them from being financially free. So the reason we talk about infinite banking, the reason we use these life insurance companies to store our cash is, one, to protect it from loss, right? There's liquidity, there's protection. Those are huge pieces for us. We want all the tax benefits, but it's so that we can actually find these assets. And I want to talk about that, right? So Stallion, we've been, reporting to the world for almost the last 5 years now on exactly what we're doing with our dollars. And how we've been buying assets, and we've tracked it every single month going back to July of 2020. And this month, how much money do we build in passive income?
So this month we're at $35,162.
Now, if you looked at our report in December, you noticed that we did over 50,000. You're like, wait a second, guys. From 50 to 35 is the decline, and that's kind of why we're having this conversation. Is yes, we're seeing it too. We're seeing recession in all assets. But here's the question I would ask you. Would you rather have $0 in passive income, or would you rather have 20% less than what you had the month before, 2 months before, right? Like, even though we're not happy that our passive income is lower, we are just thrilled, ecstatic, elated that our cash is there and coming in to help support these other things that we're doing.
But let me add some to that, Russ. when you just pointed out something I think is most people don't think about. When you said a reduction, we're talking about a 20% reduction in the passive income that we received. How is that different? Let's break this down. How is that different than someone having a 20% reduction in a portfolio that they have no cash flow from?
Yeah, if my 401k balance is down 10%, 20%, yeah, I can't touch it. I can't use it. It didn't help me. If I lost my job, then I'm like subject to whatever the rules and regulations are to be able to get any of it. And if I take it, then its balance can never go back up, right? Like what I took from it can never go back up. But when we talk about passive income, we're not talking about the asset, right? Like, so for most people, they don't have any income from their asset. So if you wanted to call your 401k, your stock portfolio, your mutual funds, whatever, an asset, that's debatable, but we'll just give you, for the benefit of the conversation, that was an asset. But you don't have any income from it, right? And so if it's down 10 or 20%, you're looking at the balance sheet and you're saying, I'm down. But for us, we don't care right now if our asset, quote unquote, assets that are behind these passive incomes are down, because we're not selling them, because we're taking the cash flow from them. So we're not subject to the losses, because my guess is those assets are going to be down in value today. And if we all say, hey, eventually, like a bad haircut, they'll all rebound at some point. We don't know when. Hopefully we can, last it out. What's the difference between the ones that are producing passive income like the ones we have is that we're able to use those to fill in the gaps if something happens to us in our job, whether that's a job loss, a job decline as far as income, all the above.
Well, this is such a key thing, and it's so simple. I almost don't want to talk about it, but I think it is so, like, let's bring this into real life. You're at your job right now. You're at your business. What are people saying? Hey, man, my portfolio's down 8%. Hey, I lost 10% in my 401k overnight. That's a hard thing, right? But now add to it, I just lost my job. What does it matter that something you couldn't touch lost 10% and you've lost your job? Compare that to, I lost my job and my passive income went down even 20%, twice as much. What does that mean? I still can survive on the passive income. It may have affected some of my lifestyle choices. Like maybe I don't go out to eat as much, or maybe I have to, get rid of a vehicle that was an expensive payment because my passive income's not covering that for whatever reason. I'm just trying to make this real life for us. There is a massive difference in how I approach a recession right now today. What we've been pointing to is all these things that are pointing to recession. When I know that I have done the due diligence, I've done the work, I've become the investor, I've got capital in a place that I own and control, and I've created some passive income streams, I can be so much more confident in light of the wake of what we're dealing with right now, because I have cash flow. Do not miss that.
Well, and that cash flow, right, is what, right now we're not using it. But if we were to lose our jobs, right, if for whatever reason we needed to in our business, say, hey, we got to redirect our capital in our business. We don't need to be taking distributions out of it. Now that passive income could be turned to start paying the monthly expenses. If you're looking out there and you're saying, hey, asset prices are down, they're compressed a little bit. Maybe it's an opportunity for me to go out there and pick up some assets because someone else needs cash, right? They can't wait it out. They have to take that cash to pay the bills. Well, now can you take that cash flow that you have to pay a bank loan, for instance, whatever your thing is, to support buying an asset that maybe is depressed that you can now use to then, have the benefits, right? When do you make money when buying something?
On the buy.
Yeah, you make money always on the buy. I kind of said it twice to you there, gave you the hint away. That's my gifting. But that's kind of what we were thinking. We always know we make money when we buy things. Well, if you have cash flow, you have the ability to buy things. This is just, I think as timely as we possibly can have this conversation. We've been beating this horse forever. Infinite banking is truly the tool that you need to be able to get up the mountain. For so many people, they're trying to climb Mount Everest, and for them, Mount Everest is to get to where their passive income exceeds their monthly expenses, so that maybe they can spend more time with their family. Maybe it's so that they can quit the job that they've always hated. Maybe it's to actually have purpose. I had an amazing lunch yesterday with a guy. He has found his purpose, and it is teaching college students entrepreneurship. He goes around the Southeast and is investing in young people. He loves it. And he told me, he said, I would never be able to do that without passive income, Russ. This is the thing that has allowed me to do the stuff that I love to do. And he's on fire, man. Like, it's so fun to watch him. Well, for some people, to Mount Everest is to get to where they have that passive income that exceeds their monthly expenses. But the first step to climbing the mountain is you got to get to base camp. You know, like, you got to get all your tools together and get to base camp. And by the way, getting to base camp is climbing higher than most people have ever gotten to. So when we talk about building your passive income operating system, inserting the infinite banking concept into your life, we realize that it's a lift. It's not as easy as we wish it was, right? Like, the insurance company would just hand out an insurance policy to everybody, we'd be ready to go. No, there's some things we have to do. We got to sometimes go through some hard decisions in our life where we got to, as you said, redirect capital. We got to admit some of our wrongs, and none of that's easy. But once it's done the first time. The beauty of it is that it can scale from there. And maybe that's where you are right now. Maybe you've never done that. And this is the thing that you needed to hear right where you are. I need to get that installed in my life. Go to wealthwithoutwallstreet.com/free call. And one of our team members can tell you exactly how to go through that process. We have a 4 to 6 week boot camp, 101 with a coach, so that you're not trying to guesswork this thing. You're not hoping that whatever your buddy did or somebody you heard on another podcast is right or wrong. They're going to actually walk you through this process 101 so that you don't make the mistakes that so often time people do by getting the wrong things installed. But if that's not you, you've already done that. You've been listening to our show for years. We've been doing this podcast, Joey, for now almost 8 years. And you're like, I did that, but I didn't do anything else. I didn't become a better investor. I didn't learn, how to start buying assets, because you know what? The market's been going good and I haven't had a real reason to do any of those other things. But now you're feeling the pressure,
right?
Yeah.
I'm comfortable. Yeah.
You're feeling it. And you're like, I've got to do that. We have a passive income lab for you. And if you go back to college, Stallion, there was classes, there was lecture classes. I don't know if you had these at your little Montevallo, but at Auburn, there were some lecture classes, bro. I could tell you, I could sit on the back row and I could sleep. And I could study, the night before the test, and I could get an A. But for the handful of classes that I had that had a lab associated with them, which, I was a business, so I didn't spend a whole lot of time in the lab. But in the ones that had labs early on, I knew. I knew it was on me. Like, I was going to have to show up and get crap done in order to actually get out of that class with a positive grade. And that's the way we build our passive income lab. That it's not fluff. It's not just sit back and absorb information. It's not theory. It's implementation. It's what you need to become a better investor. Because as Robert Kiyosaki says, no good about investments, just good about investors. And if you've never become an investor, you're a bad investor. I'm just going to tell you. And up to this point, maybe you made a couple investments and they worked out and you're like, oh, I'm a good investor. But now maybe some of those things got some warts on them. Maybe now some of the places that you've invested are asking you for, they're having a capital call. Maybe some of those investments have actually turned out that they weren't true investments. They were frauds. And you've like, man, I got to go back to school on this thing. I got to be able to build passive income. Well, we have a lab built specifically for you that you go through 101 with the coach, and you're actually in a group 2 so that you don't feel like you're on an island. And our promise in there is that you are going to build passive income. And we're going to work with you until you do. And if you've never taken action, if you've never used your infinite banking system up to this point, that lab exists for you. It does. If you don't have infinite banking, you can't get in our lab. Because we know that you trying to build a structure on top of sand is going to crash, and we don't want to be a part of it. So if you've got infinite banking installed in your life, that passive income lab is available to you. You can go to wealthwithoutwallstreet.com/free call and ask the coach about how you could get into that group. How could you be a part of that class?
So Russ has done a great job of laying it out exactly where you're at and what you need to get to the top of Mount Everest, what you need to get to financial freedom, where your passive income exceeds your monthly expenses. Are you in step 1, getting your system set up? Are you in step 2, needing to go back to school, become the better investor that you need to become? If either one of those, we have a solution for you. But at the end of the day, Russ, this is about taking in news. It's not bad news. It's not good news. It's just news. The recession is here, and it's going to show its head more and more and more as the year continues. But are you prepared? And if you're not prepared, now's the time to take action. I hope this has been valuable to you. Russ and I always want to bring things that are cutting edge, things that are outside of the box, exposing you to opportunities that you would never otherwise hear. And if you found value, please rate and review the show. Please share this with a coworker, share this with a friend who may have a business just like yours that's concerned about some of the same things that you are. This is how we get the word out. This is how we change people's lives. And so we appreciate you. Be sure to catch us on the next episode.
This has been the Wealth Without Wall Street podcast. Don't forget to subscribe to the show to break free of the Wall Street mindset and begin building wealth on your own terms in places you understand so that your wealth will never run dry. See you next episode.